walk us through what an SBA loan is and how it works, and kind of start us out from the beginning.
Okay. And Ryan, thanks for having me on. So an SBA loan, first off, it's just simply a loan that banks lend with that SBA backing, with an insurance policy from the SBA. Many people that come to us think the SBA is actually lending out the money. They are not lending out the money. It's simply a loan that is insured by the SBA. And what does that mean for a buyer? Well, it means that there are going to be a lot more lenient loan requirements and a lot higher leveraging on that loan because banks are protected on the downside. So, and additionally, in this space in particular, there's really no tangible asset when you acquire an online business, be it service-based or product-based. There's really no tangible asset for the most part. It's considered goodwill lending. So it kind of puts the bank at ease of lending when there's absolutely no collateral. And in this space, the only type of financing available is an SBA-backed loan.
That's awesome. I appreciate that. Yeah. What's interesting about these online businesses is you're kind of doing it based off, the cash flow, the historical cash flow of the business. There aren't necessarily like a building or, 20 tow trucks that you have assets kind of backed towards it. You kind of answered the why. Why are these the only businesses, or why are these the only financing options for a lot of these businesses right now?
Again, it goes back to the fact that there's no tangible asset. Lenders generally lend based on what collateral is provided to them. Well, there is no collateral. There's no there, as I like to say. So banks are more comfortable when they're insured, or 75% of the loan that they're giving out is insured by the government. They're more willing to lend when there is no collateral. And that's why there's no alternative financing. And oftentimes, Ryan, I'll have during our consultation with our buyer clients, they'll say, okay, so that's SBA, but what about other lending products? There are none, because again, you're not buying a house where there's a house as collateral. You're not buying a building where there's a building collateral. There's really nothing. Yes, there's inventory in some cases when it's a product-based business, but especially on a service side, there is nothing. It's just considered goodwill lending. It's just simply cash flow lending. So that's why there's no alternative financing.
And a lot of times, if you do it based off inventory, that inventory is in a different state in a 3PL, right? So the bank doesn't want the inventory, and it's not even anywhere near that particular bank.
Right.
Who are SBA loans typically for?
Well, first off, they're typically they're exclusively for either U.S. citizens or permanent resident aliens. We get a lot of inquiries from overseas. Unfortunately, these loans aren't allowed to be given out to people from overseas. Especially, we get a lot of inquiries from the UK. Additionally, the business needs to be domiciled in the US currently, not eventually, not after acquisition, but currently, it has to be domiciled in the US. So yes, it kind of limits the financing ability when a lot of these online businesses are elsewhere. But we hope to correct that here at E-commerce Lending. We hope to have an alternative financing product this year at some point. But for right now, it's, again, limited to what SBA allows.